I'm joined here with Idris, who's just hit his 10% profit target on the $30,000 account. So, Idris, welcome today. Congratulations on reaching your 10% profit target. If you could just start by just introducing yourself, letting everybody know how long you've been trading for, and maybe how you got into trading originally.
Sure. So, I started about 7 years ago. I'm 27 now. So, previously I was managing, very kind of small funds, as everyone does, and what I always say now is to people, they're learning funds, don't expect to make a fortune, use that to really, drag out and learn for as long as possible. I didn't do that, obviously. I do multiple accounts, like I'm sure, a lot of people do.
Absolutely.
But, it was just one of those things where, it's like a trial and error thing. I think what really got me hooked was, I made quite a little bit of money, and I'm sure this is probably, relatable to a lot of people as well, but you make a fair bit of money unknowingly, and not really preparing to make that money. You see it, you snap it up, and then it's like, right, well, let's do that again and again and again. And unfortunately, it doesn't work like that. But
exactly,
I was kind of hooked.
It's not something that's repeatable over on a consistent basis.
I think that's the thing that gets people hooked, but then also leads them to lose a lot of money. They want to see that kind of return off such a small account, over and over again, and it just doesn't happen. So, I kind of came to the end of my degree and I invested a bit more time into it. And, luckily I got on the housing ladder quite early, and, with equity and funding my own capital, that helped massively. So, I'm very kind of lucky to be in that position. But, fast forward another couple of years, I was starting to, about 12 months, I was starting to, break even. I wasn't really losing any money. And then, another 6 to 12 months, a matter of like fine tuning, I really found something that I thought, was, relatable. At the time I was still working. I used to work as a QS, a quantity surveyor. And again, it was really hard to leave that job as well. I really enjoyed that. And, the work-life balance allowed me to do a bit of trading, and, everything was okay. But, it then started pushing towards a 2 or 3 year mark, and I was really getting to grips with it. I was really like, focusing on, just trading and, investments, and, you become hooked. You find one news source, for example, and, it refers you to another one. And then all of a sudden, you've got so much to do, and you realize every day you realize there's so much more you can learn, and so much more that's out there that helps with your, investment and trading decisions.
100%.
So, again, going forward, fast forward, say now 4.5 years, this is when I left my employment and went full time, partly because I needed to stay with that kind of salary for affordability for my next house, and all that kind of stuff. I've done another property flip, and that helped again fund my capital. And again, I've recently just completed another one, which again, just kind of feeds the, trading capital and investment portfolios and stuff. So, 7 and a bit years on, I'm kind of in this position now where, I feel like I've finally kind of made it, if you know what I mean, where, I've got money behind me, I've got assurance, I've got, a safety net, I've got different investments, I don't depend on trading solely. I've got kind of a business made up from it as well. So, these different pools where, if the markets are a little bit bad, or, you don't really see something that complements your day-to-day activities or your weekly activities, and, you've got that flexibility to, kind of sit on the sideline. So, I think, unfortunately, a lot of people don't have that, luxury, and that's what leads them to overtrade and, really give themselves a bit of a bad experience initially, right? So.
For sure, absolutely. You make a really good point there as well about the learning process and the learning journey. You said, that there's always things that you can continue to learn. You never really get to a stage where you've ticked the trading box and you've learned everything. You're learning always on a daily basis when you're trading. So that's a really good point. And again, that's another misconception that people have, that people think that you can trade for 1, 2, 3, and maybe when you get to year 5, you've kind of checked the box, you've completed it as such. You have a working strategy. It's a constant journey, a constant learning experience. That's something that's really crucial for beginners, people coming into the industry, to learn and know as well. So I want to go back a little bit as back to the kind of start. What was it that specifically got you into learning FX trading? Did you have a mentor? Did you just start, self-teaching? How did you really start your journey going into learning about trading specifically?
Yeah, so I went to in sixth form college. I had a friend called Matt, and he was a South African bloke, and he was big into his economics and bits and pieces. And he kind of got me interested in it. I think he fell off it a little bit. I think sometimes life takes over, or he maybe just chose a different path. But
absolutely.
or maybe something not to do with effectively retail trading. He works in finance and stuff, but not direct retail trading.
Yeah.
Again, maybe there's a number of reasons why it doesn't work out for people, right? But
for sure,
he kind of got me into it, and from there, like I say, for the first kind of 3, 6, 9 months, I was kind of trial and error. I did get into a really good focus groups with a really good focus group with a handful of people.
Yeah.
That they seemed like honest, and a lot of the time now.
Is that something that really helped you, being a part, being around other people, other traders, people with kind of like-minded ideas?
Absolutely. So, again, you've got to be kind of careful with, who you associate yourself with, because, one, there's a lot of people behind screens that, have big egos, right? And all they do is, post what people want to see. And whether it's on social media or whether it's in these small focus groups, what I found with the group that I was in is, no one really cared about money. Everyone was on slightly different levels, but, everyone was thinking like percentages, and everyone was very kind of supportive of one another. So
that's very good.
When it's not like, oh, here's my profits, this is what I've made, and people only pop up when they've made a fortune or whatnot. It's very, very, everyone turned up every day, and everyone was committing or contributing, and that really helped me. And again, it helped fast track, my trading, right? And again, just simple things that people were saying, obviously risk management, goes without saying, right?
Absolutely.
If you can manage your money, if you can't manage £100, you can't manage £100,000, right? So
absolutely,
just by amassing more money, people seem to think, right, well, we can trade better now, but it doesn't work like that.
No,
so
absolutely.
These people really just take you back to the basics, the absolute basics, and think, right, are you doing this properly? And I'm saying to myself, no, I'm not. And then it's like, right, well, I need to do this properly. And then straight away you start building, the foundations. And I always say this to people now, really master the foundations and the basics, and then start building upon that. A building is only as tall as the foundations it's built upon, right? So if you're learning, if you're trying to run before you can walk, then you're going to fall over, right? So
absolutely.
If you really start with small money, working percentages and stuff, and if you can make 1% a week or 2% or 2.5% a week off £100, you should theoretically just be able to double your lot sizes or add an extra zero in your lot size and do it with £100,000 or £1,000, £10,000, etc. Right? So
absolutely, yeah, exactly. Like again, going back to your point that you made about if you aren't able to trade £100, you're not currently going to be able to trade £100,000. That's something that's very prevalent in our program, and the way everything is structured, the way everybody starts with 15,000, every 10% profit that you make, the account size is doubled, but there's not like a massive jump where you progress up to 120,000 or 200,000, let's say, where you're then out of your depth, you're unable to trade.
No, exactly.
So all well and good having a massive account behind you, but if you're unable to successfully trade it to make profits for yourself, that account is effectively rendered useless. And that's all about building that. It's about building the psychology, the risk management to be able to do that. And you only get that by managing live capital yourself. So that's something that, we have found is really, really important. Moving forward, the guys that end up being successful on those account sizes that we see are guys that start from the bottom and they build up, and they build, like you say, they get all of the foundations and the fundamentals correct to get to that stage where they're then able to make significant profits for themselves, and leave their 9-to-5 job or whatever it is that they want to achieve from trading. So fantastic. So let's kind of flip it forward now to today. So let's what are the kind of what markets are you looking at the moment? What are you looking at currently?
So typically, and I was a little bit nervous about jumping on this call because I was actively in a cable long. So at the moment, I mean, I've just closed it out. I've trialed everything up to 109. On the minute chart, I was just literally trialing stops, updating the group and stuff. And with the volume, like I was saying, pretty cool. It's just it's very different at the moment to what we were experiencing a few months ago, right? And I mean, even in the last couple of years, Western Texas Oil was trading, March 2020 or May 2020 contract at minus $37 a barrel. Fast forward 12 months, you then see in, May 2021, 2022, in fact, you're seeing $129 a barrel. So,
absolutely.
The markets are a little bit, wacky, and, especially in the last couple of years compared to, the first 5 years, cable, for example, GJ is typically what I trade with your account. Obviously, you guys don't allow like commodities and bits and pieces, which is, again, good for, there's pros and cons with everything, right? And we'll kind of get into that in a second. But, I have to kind of move to other accounts to trade, the likes of gold and Western Texas, which is no problem. But, I've been trading cable and GJ quite a bit. I think Aussie US dollar as well, just to slow things down a little bit. Obviously, a dollar bid for the last, handful of months, right? We're setting fresh highs all the time. Cable's been sinking, obviously with the mini budget that was announced. Cable, pulled back further. Yesterday, obviously, Bank of England has, tried to keep the pound afloat, which is why we started to see, I think, a bounce from that 106 handle up to around 109, and then again we pulled back over the Eastern yesterday, and that's why I tried to catch that long again up to 109 initially, then possibly 110 from around 107.829. So that's the trade I was in this morning, and then again leading into that, caught some really good trades. Got very lucky with a trade with your account, I believe, which was around 108 short down to 105,500. We actually pulled down much further than that, but again, it was an Eastern trade. I don't typically trade the Eastern session, but if you're calculated, you can make these kind of decisions, right? And again, having the flexibility of different accounts, if I'm not performing so well on one, I'm not going to, copy those trades onto the other account. My trades are usually different from account to account. Yeah. So, let's say I catch something nice on one account, and then I might think, okay, right, well, that's done for the day. Let's look at something else on somewhere else,
Yeah, 100%.
Time frames, maybe different instruments and that kind of stuff. So, a lot of pound pairs and a lot of US dollar pairs. I think it goes without saying, trade the Euro London session, the North American overlap, and I typically swing. So, at the moment, if you look at the likes of the 4 hour and the daily candles, there's not really much opportunity on the 4 hour and the daily because of, the sheer one-sided markets, the bloodbath we've seen on cable, the rallies we've seen on the dollar. So it's like you do need to now kind of dig into these lower timeframes to grab your entries, right? And it's not typically how we trade. So we like to, have that kind of set and forget approach, not set and forget. I don't like using that because, you can't forget. You need to, have a management with your position, but working from the higher timeframes means you're not checking your phone for updates or your screen for updates every 10 minutes. Right?
Exactly.
You can just chill out and, let it go for an hour or so, a couple of hours, set your alerts on TradingView. When you get a notification, then you can, administer that position as and when, right? So, it's changed quite a bit, in all honesty, within the last kind of couple of 3 weeks. But, we've obviously made the progress on the account. I think I'm sitting, I was up about, carried over from that previous trade into some positive equity. We've actually come back a little bit. I was taking GJ longs on the account just a minute ago. And again, like I was saying just before with the other accounts, I was taking cable longs on the other. I held the cable longs because, I was in good for the day, but I was sub 60K on the account. So I thought, what we'll do, we'll just get that back up to 60, take the stress away from that account. We'll hold the one on cable on the other account. And then, what we'll do is reevaluate, next week, I think. We are starting to see, in my opinion, slow down, and these hourly candles are now starting to see setups. So I'm looking at the hourly on cable at the moment, and now there's ranges that we can trade. And, our whole strategy is built on, trading between the zones. Finding best value price during that period. Obviously, every market, is based on supply and demand. But if you can measure a trade and it, it's logical, take it, right. So
100%. Okay, fantastic. I think it's really interesting what you say about managing multiple accounts and the trades that you place on those. A lot of people think, want to immediately link up their personal account with their prop firm account, maybe with another personal account, and take all of the same positions on all of those accounts to make as much profit as possible. It's interesting what you say about, and it's something that I actually do personally as well, is, trading multiple markets, but on different accounts. So for example, if you have something, if something goes poorly on one account, it hasn't gone, you haven't had that negative impact and effect on the other account. So I think that's something that's very sensible, and a lot of traders can maybe learn from that when they are looking to trade multiple kind of different asset classes or different markets. Perfect. So what about in terms of going back to the way that you guys are trading specifically? You've spoken a lot there about the kind of fundamentals and what the market is, the market sentiment is doing. Are you guys technical traders, fundamental traders? What are you guys specifically looking for when you're looking at, possible setups?
Again, in our group that we have now, we've got some, amazing traders that trade all markets, right? So, we were primarily, technical based, initially, when you first get into the markets, I think everyone looks at technicals, right? So, again, you want to take one step at a time, and the more comfortable you get with your technicals, then you want to try and implement a little bit more and a little bit more and a little bit more, just to kind of give you that maybe reassurance, peace of mind, let's say, to you know, an extra confluence, let's say, right? So, you know, if you are trading in line with, you know, central banks and, you know, you understanding the heights are going up, inflation's going up, and you can see the currency, you know, catching bid, then if you can implement that into your technicals, then great, right? And that's obviously what's happened with the dollar. And cable has pulled down massively. The dollar's rallied massively, setting fresh highs, you know, within the last couple of decades. And, you know, it's quite a kind of historical thing for my trading, you know, path anyway. So, you know, implementing fundamental, I don't trade economic events. So obviously you get scheduled events, right? You know, and obviously you guys don't allow that.
Yes, that fits in very well.
Which is really good. I really believe in that. So, you know, a lot of the time people might make a little bit of money and then gamble it away thinking they can make a bit more, a bit quicker on these economic events.
100%.
Again, you know, even if you trade in line with the way the data goes, you know, let's say it's, you know, better than expected, there's nothing to say that that might pull back and go the opposite way because of, you know, what's been priced into that event previously, right? So
absolutely.
You know,
and you get excess volatility at times like that as well. You get volatility, you know, you get a massive spread.
You might get wicked out and then it dumps, you know.
Exactly. You know, like you mentioned, you know, it's trading those kind of events. We see it as gambling and not trading.
Absolutely.
So that's something that
Agreed. And unfortunately, yesterday, cable. So I think it was when the Bank of England announced the gilt purchases, wicked up massively, and then came straight back down to hit our take profit. So, you know, risk events, you know, you can't really predict these. You have to just factor those in and accept the L's, right? But, you know, economic events, you know when they are, they're scheduled, and you can, you know, cautiously be aware of those and, you know, get rid of your positions and whatnot, right? And the amount of times, you know, people typically will maybe make a bit of money and, like I say, maybe incur a quick loss off a news event, then it goes in their anticipated direction, then they try doubling down and trying to recoup those losses. Before you know it, you've spiraled out of control and you've lost 2, 3, 4 weeks worth of gains, right? So
yeah, absolutely.
That is something that I kind of really do believe in. And obviously the lot size, you know, the risk management tool that you guys, you know, implement as well, that I can't recommend that enough, to be honest. And the amount of times people maybe go up a little bit and see a bit of profit, and then they go back down to their base, which is, I don't know, let's say 60K. They go to, say, 62K, down to 60K. Oh, well, I was at 62K. I need to get back to that. So, you know, they increase their lot size and try and get back there quickly.
Exactly.
So, you know, again, you know, if you're comfortable with your strategy, things will work out in the long run. And I always tell people to look at, you know, 30, 40, 50, 60 trades as opposed to just, you know, a handful. So
absolutely.
Again, you know, there's only so much you can kind of tell people, but again, it's one of those, if you can reduce the, you know, the psychological battle, then, you know, it gives you a better, clearer vision of, you know, what you're looking to achieve.
Exactly. That lot size limitation, it stops people from breaking their risk management rules and guidelines. You know, we see that one of the biggest reasons that traders have big drawdowns is because they're breaking their own rules. And if you're trading with one of our accounts, you're not able to do that. So we have lots of traders, like you mentioned, that will come in and will start managing capital with us, and they're holding the balance. So like you mentioned, they're up, they're down, they're up, they're down. Yeah. But put into a structured environment where they can't break any of their rules, they can't, you know, overtrade, they can't over leverage the account size. You see them only go one way, and that's up, and that's towards 10% profit targets. Like we always say, you know, you don't need to, you know, risk large amounts on our capital, because we do the difficult bit for you. Like you said at the start, making, you know, with small accounts, making large gains in a small period of time is not something that's repeatable over time. You don't need to do that with us. You just need to make small incremental gains, get to your 10%, and we do that difficult bit for you, which is doubling the account size. Sure. Exactly. That's something, you know, it's really good that you've seen the value in that, because it's not always something that people see the initial value in. They see lot size limitation as a restriction and not something that can actually help their trading and benefit them in the long run. So
I mean, all you kind of have to do is look at the statistics of, you know, other prop firms and stuff. I think, you know, the sheer lack of people that actually get through you know, evaluations in phase one. And again, I probably, you know, predict that it's due to that, you know, risk. And the first thing I said was, you know, if you can manage your risk, right, learn to manage your risk. So, you know, that you guys obviously implement that, that's like a massive up on other prop firms that are maybe a bit more commercial and a bit more, you know, out there. But, you know, for those, I truly do believe that obviously, you know, what you guys offer, and I'm not just saying this because I'm on a call, it's a lot more suited and tailored to, you know, help a trader succeed. You know, I feel like you have, you know, the trader's best interest at heart.
Absolutely.
As opposed to a lot of other companies that, you know, just want to obviously take a performance fee and a challenge fee, knowing that, you know, 95% of those might fail, and that's how their business model's built, off taking these fees and stuff. Whereas, you know, obviously you guys are, you know, London based, a bit smaller, but, you know, it's a better and more moral business model, I believe. So, and again, I've kind of really only typically work with partners and affiliate with partners that, you know, I believe are, you know, of a similar kind of moral standard, if that makes sense.
Yeah, absolutely. Makes perfect sense.
Especially given with, you know, how you know, obviously the industry is at the moment, and, you know, other people like myself that try and maybe pull the wool over people's eyes and aren't so maybe
transparent is the word that
transparent,
we use. Aren't so transparent. Yeah, exactly.
No, there you go.
Yeah, perfect. You know, on that topic, could you give us kind of an overview of how you've been finding the program so far? Obviously, you've just progressed up onto the 60K account size.
Yeah. So I mean, so we have yeah, I mean, everything from, you know, customer service. So Elena, she's pretty much who I deal with most of the time. You know, she's been, you know, I've got her via WhatsApp, you know, very, very helpful. Customer service is good. You know, if I've got any inquiries, I had the payout, which was pretty much within, you know, 12 to 24 hours. I think my bad, I put in some incorrect details and then I resubmitted via PayPal, but you know, I mean, very, very good. Obviously the dashboard again provides everything you need in terms of, you know, performance and stuff. I obviously, you know, journal trades to a degree. It's more of me typically journaling trades with something to help develop myself. But, you know, even now I typically do it if I'm reducing the amount I trade, I'll journal them. But, you know, having obviously the performance dashboard, it's good. It's not, you know, it's not too much information. It's just kind of what you need. Obviously understanding consecutive wins, consecutive losses, understanding you'll go through these phases and, you know, to get used to it. You know, you won't always, you know, have, you know, a massive win streak, but, you know, if you're on a loss streak, those loss streaks, you always know what's going to be. If you're risking 0.5% of your account or 1% of your account, you always know, you know, what the max that can be. Whereas, you know, if you're on a winning streak, you could have 3R, 4R, 5R, you know. I think I made almost like a 9R trade on that GBP US dollar short. So like a $250 risk, I think a bank's best part of 2,500, right? So, you know, that's pretty much almost. And this was a question that I had from my group as well. You know, people asking questions about obviously your company. Was, oh yeah, but if you've got, you know, risk limitations and stuff and you can only risk one lot on a $15,000 account, you know, and two lots on 30, I said, yeah, but you have to put it into perspective. That encourages you to, you know, not, in my opinion, this encourages you to work from higher time frames and catch bigger moves. You know, so you're actually, you know, setting yourself up better. You can't scalp because you can't have that lot size, right? So saying that, obviously with these markets, you know, there's a bit more potential for that, but you know, with the volatility and stuff, but you know, it encourages you to pick up higher time frame setups, which again, you know, reduces the amount you can trade, which then you know, helps give you, you know, realistic targets and stuff that you know, you can capitalize on. So, you know, if you're looking to trade, I know one lot, I think it was one lot, $30,000 account, you know, 10% would be on cable, 300 pips, right? So $1 per, so, you know, you're looking for 300 pips. You can catch that in a swing, you know, a single trade. Obviously, you're going to scale out methodically as you go. You want to pay yourself a little bit, trial your stops and stuff. So if you did hit a 10R, you're not going to get the full 10R. Typically, I would close out along the way and pay yourself in case, you know, there's any pullbacks. But 300 pips, you know, and, you know, people that swing, obviously you don't offer gold, but again, I think that's for the protection of the trader. You know, gold, obviously different contract volume, you know, it's a little bit more aggressive. Again, the pip range is a lot greater. So I think those that are looking to sustainably trade, FX is probably the, you know, the option. And again, you know, if you're not looking for the volume and stuff and you want to slow things down, maybe look at Euro US dollar or Australian dollar US dollar, because they're kind of slower paced instruments, right? But yeah, I mean, so far everything's been very, very good. Any queries I've had, questions I've had, they've been answered, you know, instantly, pretty much.
Brilliant.
You know, everyone I've dealt with, I've had various phone call, you know, Zoom calls with you guys. It's been very professional. Again, I like the fact you're London based. Because, you know, if, I don't know, Elaine have said, you know, if you ever fancy popping in,
100%.
You know, that's something I'd be keen to do as well. So, yeah, all round very good experience. And I think it's with you guys, the things that you have in place that other people don't have in place is what made me want to connect with you guys more as opposed to anyone else. Because, like I say, it seems like you've got our, you know, best interest at heart, right? So you want people to succeed. You want a handful of, you know, traders or a group of traders or 100 or 1,000 or however many, you know, you work from to, you know, be successful. So as opposed to others that have a different business model, and I don't think they've got your best interest at heart. So
100%, absolutely. You know, again, going back to what you said about the lot size limitation, it's also going to force people to be more selective with their trades. You know,
absolutely,
and that's only going to have positive impacts for you moving forward. If you know that if you take this one that you probably shouldn't take, you know, if you can't add any more positions to that, you're probably not going to take it. You're going to wait for the position that does
absolutely
fit
right,
everything
right.
that's in your setup.
Absolutely
so
right.
that's really important as well. So, okay, brilliant. So could you, if you could, I know this is, you know, very kind of broad and there's so many factors that go into this. If you could give one piece of advice for, you know, beginner trader or someone who is maybe struggling with profitability in their trading, what would you say that piece of advice would be?
So I've kind of I'm going to kind of contradict myself here now.
Okay.
But obviously, because like I say, market environments and bits and pieces, you know, the amount of buying and selling I've been doing with single pairs, opening positions, closing positions on single, you know, mostly like cable and maybe GJ. But, you know, I focus on a couple of pairs, which is what I would advise people do, because you understand how that pair moves.
Yeah.
And again, you know, 1 to 2 trades a day. So this is typically how we normally trade. 1 to 2 trades a day. Obviously, with you guys, it'd just be the one, which I'm totally happy with. And, you know, let it unfold. Let the markets do its thing. Work from slower paced environments. Define a strategy that you're happy with. You know, that can be, you know, built up of confluences that you look to, you know, stack. So, yeah, whole numbers, you know, areas of demand, supply, support, resistance, breakout highs, breakout lows, those kind of things, you know, key levels, monthly and weeklies is what we use. And stack those, and then, you know, you've got your single opportunity, you've got one shot a day, and then, you know, pick the best out of the bunch. You know, you've got pair comparison. So if you're looking to trade, you know, GBP US dollar, maybe look at the likes of Euro US dollar, Aussie US dollar, Dixie. Are they moving in the same direction? Are they kind of stacking up? And then, you know, pick the best out of the bunch. So in a nutshell, I would say, you know, just really slow things down, work from higher time frames, you know, understand your strategy inside and out, and then maybe apply that to lower timeframes if you want a bit more of an hands-on approach. But I think, you know, swing trading and stuff, for the majority that have 9 to 5s and stuff, you know, you want to work from these higher timeframes anyway. You know, you can't be in front of your phone or, you know, in front of your laptop or something when you're working the 9 to 5, because you know, you being 2-3 minutes late to that you know, position or whatever could, you know, really you know, damage your risk to reward. So higher time frames, on the other hand, you know, you could have like an hour or 2-3 hour window where price doesn't really move. So you don't have to be so on the ball. You can set your alerts and stuff. So I would definitely say, you know, focus on 1 or 2 trades a day, focus on 1 or 2 pairs, and just focus on higher time frames. Really learn to master those before, you know, moving on to something else. You know, you want to give yourself a good experience for new traders, especially. You know, you want to give yourself a good experience. You don't want to see your money disappear anytime quickly. You want to, you know, really draw those funds out, you know, except you might lose them. You know, it's part and parcel of the game, right? You have to kind of learn to lose. You have to lose to learn effectively, especially to develop that psychological side of things. But, you know, if you're only taking 1 trade a day and you're only risking 1% of £1,000, you're only going to lose £10 a day, and it's going to take you 100 trades on the bounce to lose that, right? So, you know, you're not going to go anywhere quickly, but, you know, you're going to learn quicker. You're going to have a much stress-free way of learning. And hopefully more people have this approach as opposed to being kind of misled and you know, promise the world and everything else, and, you know, flipping £500 into £50,000, which I think a lot of people have, especially a lot of young people as well, that seem to have the idea of. So
falling into that trap.
Yeah, unfortunately.
For sure. Exactly. All very valuable points. Idris, look, thank you very much for giving us the time today. Congratulations again on reaching your 10% profit target. And we're looking forward to continuing the partnership that we have with you.
Perfect. Me too. Thank you very much.
Bro.